In 1992, one man found a loophole that turned a few lakhs into 4,000 crores. Most people think he was a genius. Others call him a criminal. But at the Financial Fact Lab, we look at the math. This isn't just a story about a scam. It's a masterclass in confidence, leverage, and the exact moment where ambition turns into a death sentence. If you want to understand how money really moves in the shadows, pay attention, because the system he broke, it's still built on the same fragilities today. Harshad didn't just buy stocks. He found a glitch in the ready forward deal. Imagine, Bank A wants to sell government bonds to Bank B, but they don't use the actual bonds. They use a piece of paper called a bank receipt. Simple, clean, efficient. Now here's the glitch. What if the bond doesn't exist? Harshad convinced banks to write these receipts for bonds that did not exist. He was essentially getting interest-free loans of hundreds of crores using nothing but vapor. That paper became money. That money bought stocks. Those stocks went up, and paper profits turned into real profits. This is the first lesson. Leverage is a superpower, but when your leverage is built on a lie, you aren't building a skyscraper. You're building trash. Why did the public love him? Because he had unshakable confidence. Harshad didn't just move money, he moved belief. While the elite old money brokers stayed in the shadows, Harshad bought a Lexus. He lived in a 15,000 square foot penthouse. He wasn't just selling stocks, he was selling a dream. In finance, your reputation is your currency. He inflated his reputation to inflate the market. A CCP, Associated Cement Companies, went from 200 rupees to 9,000. Not because of business growth, but because of perception. He proved that if you can control the narrative, you can control the price. But here is the thing about lies. They require perfection. One missing entry, one journalist asking one stupid question. Where is the money? Sucheta Dalal noticed a 500 crore hole in the State Bank of India's books. The big bulls started to sweat. The banks panicked. They wanted their money back. But the money was tied up in stocks, and the stocks were falling. This is the liquidity trap. It's easy to get rich on paper, but it's hell trying to get that cash out when the world is watching. In finance, liquidity is oxygen. When oxygen disappears, even giants suffocate. Now, what is liquidity? Liquidity is a measure of how quickly and easily you can turn an asset into spendable cash without losing its value. Think of it as the flowiness of your money. If your wealth is liquid, it flows easily like water. If it's illiquid, it's frozen like a block of ice. When liquidity is up, flush, money is moving easily. Banks are lending, investors are buying. When liquidity is down, dry. This is the danger zone. It means people are clutching their cash and refusing to buy. Liquidity is having $20 in your pocket. You can buy popcorn right now. Illiquidity is having a $20 gold coin. It's worth the same or more, but the popcorn vendor won't take it. You have to find a coin shop, sell it. Harshad's biggest mistake wasn't the scam, it was his ego. He thought he was bigger than the system. He thought he could buy the government. When success comes too fast, the mind believes it is invincible. Greed is a calculation error. He forgot that finance has one rule: the house always wins. In the end, he lost the money, the Lexus, and his freedom. He died in a jail cell with nothing but a legal battle. The lesson? Risk can make you a king. Confidence can make you a legend. But ego will always make you a casualty, and greed turns intelligence into blindness. final financial lesson. Build wealth with skill. Grow it with discipline. Protect it from ego. If you learned something about the dark side of wealth today, subscribe to Financial Fact Lab. Because the next scam, it's happening right now.